What's up, guys? Welcome back to another video. My name is Nick and I talk all about trading and investing here on my YouTube channel. And today we're talking about this guy, this Euro USD pair, and how to actually trade it, because I think it's a very different market environment that we see now than we did in years past. Now, I've been trading the Euro USD for multiple years now. This pair has been one of the old reliables in the toolbox, if you will. And so I think it's really important for us to talk about how to actually trade it. So stay tuned. We're going to get all into this. Make sure to subscribe, hit that like button, all of those good things, and let's go. What's up, guys? Welcome back. So we're talking about Euro USD, and this one is one of my favorite currency pairs because it's honestly one of the easiest, yet honestly one of the most confusing currency pairs at the same time. The Euro USD is the most heavily traded market, not just currency pair, but the entire market of the entire world. I'm talking the S&P 500, I'm talking other currency pairs, I'm talking the Euro USD by itself is number one. It's the most heavily traded. And the reason I wanted to make this video is because I've made a video like this in the past where the euro dollar acted very differently than how it does today. So let's break that down. What I'm going to do is I'm going to pull this up really quick, and I want to talk about 2017 through about 2019 really quick, okay? During this time, the Euro USD was a pretty cool pair to trade for an entirely different reason than 2021. Actually, let's say 2020 and 2021, because during both of these times, I had some pretty good success, if I can pat myself on the back for a moment. I had some pretty good success with trading this thing because of the market environment that basically was apparent during these two different times. Let me break that down. During 2017 through 2019, let's think about what markets were doing. Overall, as a whole, what was the global economy kind of thinking? Well, lots of growth and stability. Now, before we talk about 2020-21, then we'll get to there. You guys already know it's gonna be different than this, right? Because this has been a crazy last few months or weeks or years, really, at this point. Because in 2017 to 2019, the market as a whole, the S&P 500 was climbing higher. Things were pretty good around the world. Of course, there's always problems, there's always issues, but as a whole, pretty decent. And another thing, volatility was low. And when volatility is low, generally what we see is we see growth. We see markets doing well. We see, because things get very high volatility. They have a lot of volatility when things are unsure and scary. If there's one thing markets are afraid of, it's indecision and unknowing what's around the corner for the broader economy. Okay, so during this time, again, very low volatility and a lot of range bound, price action, PA. Okay, another final thing is low interest rates. Okay, we're going to talk about that in just a moment. But we need to understand all these things, because if you really are serious about being a trader, you need to understand what you are actually trading. And it sounds crazy, I know, but you kind of have to have a concept or an understanding of, okay, well, why is this market behaving the way it's behaving? Because now let's take a look at 2020 to 21, and what we see is that we see volatility, to say the least. Volatility, okay? Volatility very, very high during this period of time because obviously we had a pandemic, which we are still dealing with. We have markets trying to recover from that, and we have economies around the world kind of devastated by the effects of shutting down the world, for lack of a better term, right? So that has caused these last year or so to be high volatility. Instead of range bound, we had trending environments, which I'll talk about more in just a moment. I don't think that these are necessarily going away for the time being. Hint, hint on how to actually trade it, or how I'm trading it here in 2021. And then we have, of course, we do have some rebound and we have growth coming back into the markets, but there's a lot of unsureness, if you will. And so for me, that contributes to this high volatility that we are seeing and likely to probably continue to see for the time being. Okay. And then finally, actually, did I mess this up? I guess this is low interest rates were still a thing in 2017 to 2019, but interest rates, I guess we can say lower interest rates here in these last period of time. Now, the reason that this is significant is because of something called the carry trade, okay? And I have a video on the carry trade. You can check it out on YouTube. If you just search up Trader Nick carry trade, you can check out more about the carry trade. But generally speaking, what this is investors try to store money in places where they can collect the most passive income or interest, right? If you know that one currency bank, right, let's say the US dollar, is offering 2%, and the Japanese bank is offering negative 0.10%. Just as examples. These are not actually accurate at the time of making this video, but just as an example. Why would you want to hold this money, which is costing you money to just have it in the bank, instead of something like the US dollar, which is paying you something more? Well, this concept is actually a tradable concept in the currency market. In fact, it's something that happens every single day, especially by big banks, right? They're moving their big monies around. They're not talking about a $200 account or a $500 account. They're talking about a 200 million, 200, billion dollar account. They're talking ginormous figures that they need to move around, and 2% on $10 billion, that's a lot of money, right? So this is something that has drastically changed in 2021 because of these incredibly lowered interest rates. If all of the currencies are not offering high interest at all, which almost all of them are, all of the majors at least are offering near 0%, that causes major lack of storage for all of this money to go, right? If there's not an obvious, okay, hold the US dollar because it pays 2%, or hold the US dollar, it pays 5% like it has in the past, right? Those lower interest rates cause people to not want to have cash. Or at least if they do have their cash, they want to put it in the most safe haven locations, things like the yen, things like technically the dollar and the Swiss franc. Those things historically have acted as safer havens for currency. Okay, I know I'm going a little bit in depth, so again, watch the carry trade videos that I've done in the past. They are kind of more helpful or more detailed than what I'm talking about here. But all of this to say, the environment that we are in is different. Okay, the environment of 2021 and 2020 is different than these years past. During these times, let me show you. Let's jump over the chart and we'll talk about this. Okay, I'm gonna jump over to my account here, and I want to show you guys something. So if we go back to actually, you know what? Let's just use that handy dandy zoom out feature. Generally speaking, check this out. Here's 2017 to about 2019, very rough. You can notice something obvious. Of course, we have a downtrend, but what else? For the most part, we have a lot of choppiness. Yes, we're trending down overall, but it's a slow and boring and dead trend to the downside, okay? That happened for a very, very long time. Now, during this time, just one more thing about the carry trade, we had positive swaps, or you could make money by selling the euro dollar. And in fact, during this time, I was exclusively bearish on the euro USD because of the positive swaps that it yielded. So the positive swaps would pay you for holding this thing short because you were selling the euro and buying the US dollar, and the euro yielded less than the US dollar. Again, watch that carry trade video if you don't understand this, but generally speaking, you got paid positive swaps to hold the US dollar over the euro. So we were shorting the euro, buying the US dollar, and during this time, it was an incredible strategy because the trend was in our favor, the swaps were in our favor, and the technical setups were perfect for this range-bound back and forth environment that we kept seeing throughout this time. So for me, this was like the best strategy during this time. But this is why as traders, we have to be adaptable. We have to say, okay, trade what we see, not what we want to see. When this started to change, I took some L's on Euro USD. And of course, L's are a part of all trading game, right? We have to take losses in the markets. It's just part of it. Nobody is perfect. Nobody's going to get it right all the time. But you can see, look at this drastic difference. Take a mental screenshot of this and then look at this. Look at the difference in this period of time where we have a decisive, strong move to the upside. Let me tell you something that happened right around this beautiful little disgusting point in the chart. That makes no sense. Beautiful little disgusting big area of the chart. Generally speaking, what happened in this area is interest rates got slashed around the world drastically, and this carry trade died. Okay, the carry trade died. Okay, during this time, interest rates changed around the world, and basically the US dollar dropped its interest significantly to a point where there was no paying if you held this thing short, or at least not by very much at all. And so what we saw is we saw a drastic change in that same concept that we talked about. Euro USD went from it got paid to hold this and buy this to it doesn't really matter, like you're not making much money for doing this old trade. So people started drastically reversing that concept, selling the US dollar and buying the euro instead. And that, I believe, is a major contributor to this incredible run to the upside that Euro USD has been trading on the last few months. Now, the reason I bring this up is because all of this to say, is the catalyst for this major market environment change that we see here on the Euro USD. No longer are we in a boring, slow, choppy downward market on this major market. We are in a strong bullish uptrend as people sell the US dollar in favor of the euro, right? We're seeing the opposite effect happen. So, how do we trade it? Okay, now that we've talked about the fundamentals, now that we've talked about the big picture, I hope you enjoyed that. If you did, smash that like button. It does do me a favor. It helps me out by growing this little YouTube channel into a bigger one. I want to hopefully get it to 1 million subs someday. That would be really cool to say we built that sort of a community. So do help if you can. So how do we actually trade this now that we know all these fundamentals? Well, knowing the fundamentals for me sets up a thesis or a concept to go off of from there. I like the idea of trading with the trend much more now on Euro USD than I did 2 years ago. 2 years ago, of course, I still was trading with the trend, and that was a core component. I was looking for trend setups, but I was looking for reversals in favor of a overall downtrend, right? So I was looking for sells in a downtrend, just kind of continuations off of that, okay? Now, the difference here being, I'm still looking to join the trend, but I'm much more interested in just buying pullbacks, looking for, I guess if it flips and we go bearish and there's a fundamental reason behind it, then of course I would look to short and sell into that trend. But for the time being, this is a buy area, right? I've been buying this thing here. I bought, all throughout this 2020 and 2021 run, I've been a big bull. Now, again, like I mentioned, I took losses during this time because I was still trying for those shorts, and it was okay because I had taken many W's, I guess wins, throughout all those years or all the time before. So it wasn't the end of the world, but I took some losses trying to continue that until things have started to change. That's the concept of trying to trade what you see, is sometimes it's hard when things are changing. But for the time being, the market environment that we are in today, it matters that we focus on, okay, here's what's happening now. The trend is strong to the upside. So for me, that means looking for bullish setups. It means looking for breakouts and buying into pullback zones like the one that you see on the chart. By the way, if you like this tool, it's going to be available soon. You can see it basically is a scanning tool available for MetaTrader 4. You can flip through all your favorite charts, and you can set up a watch list and all that sort of stuff. So if you're not already added to our email newsletter, we're going to be dropping some information about that this week. If you're watching this in current time, and if you're watching it later, I'm sure you can find it on the website, or there should be a link down below in the description. Go find it for yourself. It's called the A1 Trading Dashboard. Okay, so but one of the things here is the pullback zone. This is the reason I pull it up. Is looking for pullbacks in an uptrend is like my #1 strategy right now. Right, looking for zones of support, looking for example, also bullish pivots. Right, here's some bullish pivots on the chart that we could potentially look out for. Right, zones where basically there was clear buy interest, very well could continue to hold buyer interest. Right, so if price comes down to this sort of level, maybe there's a longer term buy setup that I like. You can see I'm in a long position right now based on some lower time frame stuff, but for the most part on the high time frames still agrees with my analysis. The daily chart is bullish, we're in a pullback zone, and overall looking for that continuation. Now, sometimes people get very, very bearish on something that is going up or trending up. That is mistake #1, I think, if trying to trade the Euro USD, is don't right now, especially with this trend. I don't think it's super lucrative to try and fight trends. I think that right now this trending environment could be a multi-year thing. Am I for sure about that? No, I don't know. I'm not a fortune teller. I'm just trying to ride trends. So until this trend ends, until something changes, this is how I'm going to be trading it. Looking for pullbacks, looking for breakouts, looking to go only with the trend, never against it, and trying to see what comes out of this move. Again, we as participants in the market do not know what's going to happen. Technical analysis only goes so far. It doesn't tell you what's going to happen next. It gives you clues. It gives you ways to manage your risk, that sort of thing. And that's exactly how I plan to trade Euro USD, is looking for pullbacks, buying in pullback zones, buying key levels of support or bullish pivots, or bullish RSI divergence, looking for those sort of bullish situations that just overall, biggest picture, riding that trend. I hope this helps, guys. This is all I've got on the Euro USD for now. This is how I will be trading it the rest of 2021, unless something changes, which of course, then I would probably make another video. Thank you guys very much for supporting the channel. You guys have been fantastic. I've received so many cool and kind comments recently on the channel, and it really does fuel me to want to keep making these sort of videos. I really enjoy making them, and you guys clearly enjoy watching them. So thank you so much for all the support. Have a great day. Happy trading, and we'll see you back in the next one.